What if I told you that the top 1% of earners in the US pay an average federal income tax rate of just 26%, while many middle-class families pay nearly 22%? In the UK, wealthy households shield nearly half their assets from inheritance tax using tools most people don't even know exist. And across Europe, thousands of high-net-worth individuals are quietly changing only their tax residency, not their lifestyle, to cut tax bills by 50% or more. These aren't headlines from tabloids. These are facts from the IRS, HMRC, and Eurostat. The tax code isn't broken. It's built this way, and the wealthy know how to use it. Welcome to CA Wealth Workshop, a channel run by a chartered accountant, delivering research-backed strategic content for high earners, professionals, and global entrepreneurs in the US, UK, and Europe. Today, we're revealing the top 5 legal tax hacks for 2025, tailored to high earners across these regions. Not just tips, but frameworks, briefcase insights, and region-specific strategies. Let's begin. 1. Income shifting to low-tax entities. Instead of receiving all income personally, high earners structure earnings through entities. In the US, S-Corp allows splitting income into salary and distributions, cutting self-employment taxes dramatically. In the UK, LLPs and limited companies can defer tax, optimize dividends, and even income split with spouses legally. Across Europe, many use holding companies in Estonia or Luxembourg to reinvest profits at near zero effective tax. The key takeaway here is that the entity isn't the goal. The structure behind it is what creates the tax alpha. 2. Offshore trusts and legal deferral vehicles. Offshore doesn't mean illegal, it means jurisdictional advantage. In the US, wealthy families use Puerto Rico Acts 60 and 100 to defer capital gains nearly tax-free when properly relocated. In the UK, non-domicile residents set up offshore trusts in places like Guernsey or the Isle of Man, shielding global income. In the EU, Liechtenstein foundations, Malta pensions, and Irish UCITs offer legal deferral plus succession benefits. Here's a mini-case example. A UK non-dom legally saves £1.2 million in taxes over 10 years by placing overseas income into a properly structured trust. Here's another real-world example. A US-based tech founder moved to Puerto Rico under Act 60 just before selling his company. Because he met the physical presence and residency requirements, he reduced his capital gains tax from over 23.8% to nearly 0%, saving approximately $4.7 million in taxes from that single exit. But here's the kicker. The setup was initiated 15 months before the exit and required legal compliance, residency audit prep, and precise structuring. Timing and foresight are everything in tax optimization. 3. Relocation of tax residency without changing your life. Wealthy earners are increasingly relocating their tax status, not their lifestyle. In Portugal, the NHR regime offers zero foreign income tax for 10 years. In Italy, there's a flat tax of €100,000 per year on foreign income, regardless of the amount. Spain's Beckham law allows a fixed rate for relocated professionals. The framework. Evaluate 1. Days spent. 2. Center of vital interest. And 3. Treaty protections. Relocation without residency planning equals audit bait. 4. Strategic use of capital gains, not salary. The rich convert income into long-term capital gains where tax rates are significantly lower. In the US, long-term gains are capped at 20% versus income at 37%. Qualified small business stock, or QSBS, can be 100% exempt up to $10 million. In the UK, Business Asset Disposal Relief, or BADR, offers a 10% rate on £1 million of gains. In the EU, many jurisdictions offer exemptions on the sale of substantial holdings after a holding period, like in the Netherlands and Belgium. The key insight here is that tax-efficient exit planning starts years before the liquidity event. 5. Intergenerational wealth transfers without the tax drag. Tax-efficient succession is the final frontier of tax optimization. In the US, tools like GRATs and IDGTs and step-up basis loopholes are key. In the UK, gifts to trusts over 7 years before death, plus business property relief can be effective. In the EU, countries like Germany, France, and Spain have high inheritance taxes, but foundations and early gifting can reduce liabilities. For example, a German entrepreneur can shift €5 million into a family foundation, removing it from estate taxes and enabling strategic giving. Let's quickly recap your regional cheat sheet. If you're in the US, use S-Corp or LLCs to split income. Explore QSBS for capital gains exemption. Plan early for GRATs or step-up loopholes. If you're in the UK, structure income through LLPs. Use offshore trusts if you're a non-dom. Optimize business exits with bad. If you're in Europe, relocate tax residency strategically. Leverage foundations or holding companies. Know the capital gains exemption windows in your country. Tax is never one size fits all. The key is matching strategy with your jurisdiction. These aren't hacks you implement on a whim. They require structure, timing, and expert guidance. But used correctly, these 5 strategies can legally transform how much of your wealth you keep, not just earn. If you found value in this, subscribe to CA Wealth Workshop. This is where finance meets strategy. Through the lens of a chartered accountant, bringing you insights grounded in real research, real numbers, and real results. See you in the next video. And just a reminder, this channel isn't run by influencers or marketers. It's built by a chartered accountant with years of experience advising high net worth individuals, entrepreneurs, and global professionals across the US, UK, and Europe. Every video is backed by real frameworks, real tax law, and real strategy, not recycled talking points. If you're someone who wants to not just earn more but keep more and do it legally and intelligently, then CA Wealth Workshop is for you. Hit subscribe, turn on notifications, and join a growing community of high performers building wealth with purpose and precision. This is the beginning of your smartest financial chapter yet.